QQQ. This week, it dropped all the way to $61, then bounced back to $6.88. The headline looked like a recovery. But when I ran the scanner on Friday night, what I found was very different from what the headlines were saying. Let me show you exactly what the data is telling us right now. Here is what actually happened this week. The Federal Reserve held its FOMC meeting, and the market did not like what it heard. QQQ dropped hard, hitting a low of $661. At the same time, the VX Fear Index spiked all the way to 21. Then the market reversed and QQQ clawed most of that back. But here's the context people are missing. Over the past month, QQQ is still down 5.1%. 1 week of bouncing does not erase that. Now let me show you the technical picture, because this is where the scanner focuses. QQQ is currently sitting at $688. The 21-day moving average is at $697. The 50-day is at $702. QQQ is below both of those right now. That matters because those moving averages are what separate a healthy uptrend from a weak one. The one bright spot, QQQ is still above its 200-day moving average at 644, which tells us the long-term trend is still intact. But to call this a real recovery, QQQ needs to reclaim and hold 702. This is the part I want you to pay close attention to. My scanner looked at over 5,000 stocks on Friday night. It ran every one of them through our full scoring system: momentum, trend, fundamentals, setup quality. The result? 0 buy signals. Not one stock met the criteria for a high conviction entry. Now, I know that sounds discouraging, but this is actually the scanner working exactly as it should. When the market is weak, the system goes quiet. It does not force trades. That discipline is what protects you when everyone else is guessing. Here is something worth understanding about what is happening underneath the surface. The S&P 500 is only about 2% below its all-time high right now. It looks fine. But QQQ, which tracks the Nasdaq and the biggest tech stocks, is 8% below its high. And it is sitting below two key moving averages. That gap between the two indexes tells you something important. The broad market is being carried by a handful of large cap stocks, while the tech sector that normally leads is showing real weakness underneath. Historically, that kind of divergence does not last forever. It resolves one way or the other. So, what should you be watching this week? Friday, August 7th, is the jobs report, Payrolls. This is the most market-moving economic data we get every month. Here is what makes it interesting. VIX is sitting at 16 right now. The fear gauge is pricing in an almost completely quiet week. But there's a major number dropping Friday. When the market gets this complacent right before a big release, it usually means the actual move ends up larger than anyone expected. The two levels I am watching. If QQQ reclaims 702, the scanner will start generating signals again. If it breaks back below 661, we stay in capital protection mode. The scanner runs every single night. When the market gives us a real high-quality opportunity, I will post it here and walk you through exactly what the system found and why. If this kind of data-first analysis is useful to you, subscribe. That way, you do not miss the next signal when it comes. I will see you in the next one.